What's going on, everyone? Welcome back to the Independent Experience. I'm NDXP, and this is your morning market wake-up call for Thursday, July 2nd, 2020. We've got a really great article to look at this morning, so let's go ahead and dive into the markets and see where we're going to be starting today off at. Gold is up slightly, currently at $1776.80. Silver is steady at $18.12, giving us a ratio of 98.04. Platinum is down slightly, currently at $830.23, and palladium has actually gained a few dollars, currently at $1986.54. In other metals markets, rhodium is steady at $7,800. Copper is up a few cents, currently at $2.74. Aluminum is steady at 72 cents, and uranium also steady at $32.80. Barrels of crude oil are back over a point of resistance, currently at $40.11 a barrel. We had a mixed day on Wall Street yesterday. The Dow closed down 77 points at 25,734.97. The NASDAQ was up 95 points, closing out at 10,154.23. And the S&P 500 was up 15 points at 3115.86. If you guys trade in Bitcoin, those are steady, currently at 91.8812, and if you guys happen to be fans of the goldback, those are down 1 penny at 304. Would look for that to go back up to 305 later today, though. In today's article, we are reviewing. This is from from Reuters by way of Kitco News, I should say. Written by Saqib Akbal Ahmad and David Randall. This article is titled, "Investors Are Waking Up to a Possible Biden Victory in the U.S. Presidential Election." Oh boy, this one should be fun. Investors are increasingly preparing for market volatility ahead of the U.S. presidential election, with some shifting stock positions and selling the dollar as Democratic contender Joe Biden maintains a lead against President Donald Trump in opinion polls. Plenty of change in the 4 months before the November 3rd vote, and many investors remain focused on whether a resurgence of the COVID-19 virus will damage a U.S. economic rebound. Sorry about that. I didn't have any coffee yet this morning. I apologize. Some money managers, however, are already preparing for a possibility of a Joe Biden victory by betting against the dollar and cutting their positions in U.S. stocks. The president's poll numbers have fallen off a cliff, says Phil Orlando, chief equity market strategist at Federated Hermes. The market is looking at this and saying, if the election were held today, Biden wouldn't win. The latest Reuters poll shows Biden leading Trump by 8 percentage points among registered voters. Approval of Trump's handling of the coronavirus pandemic has plummeted. A Biden victory, as well as a possible Democratic sweep of the House and Senate, could threaten policies championed by Trump and generally favored by Wall Street, including lower corporate tax rates and fewer regulations, analysts said. Despite the sharp coronavirus-fueled dip, the S&P 500 is up about 37% since Trump took office. The index gained 85% and 79% in its first terms of Barack Obama and Bill Clinton, respectively. Under Biden, the corporate tax rate is likely to increase to 28%, reversing the half of the cut enacted by Trump and the Republican-led Congress in late 2017. What could reduce the S&P 500 earnings by roughly $20 a share, or that could reduce the S&P 500 earnings by roughly $20 a share, driving investors out of U.S. stocks and hurting the U.S. dollar, said Parish Apahayaya. I think I actually got that one right. Portfolio manager at the firm who is betting against the greenback. Arthur Laffer Jr., portfolio manager at Laffer Tangler Investments, unwound his dollar position last week, believing a Biden victory could lead to slower growth and pressure on the U.S. currency. Laffer Jr.'s father has advised Trump on economic issues. Net bets against the U.S. currency in futures markets recently hit a 2-year high. Potential new regulation from a Democratic administration could be a headwind for energy and financial stocks, analyst at UBS Global Wealth Management said in its note to investors. BlackRock Investment Institute recently cut its rating on U.S. equities to neutral on concerns of fading fiscal stimulus and election uncertainty. The two parties are as far apart on policy as they have ever been, making the result consequential for markets, BlackRock's analyst said in the note. Phil Orlando of Federated Hermes, we've already talked about today, has raised his cash allocation as coronavirus cases has grown and Trump's poll numbers have sagged. He plans to reduce positions in dividend-paying stocks if Trump's slide in the polls continues on concerns of increased taxes on dividends and capital gains. Plenty of investors remain unconvinced that a Biden victory or Democratic sweep would bode ill for the stocks, especially as the Federal Reserve is expected to backstop the U.S. economy if needed. As long as stimulus stays constant, you will continue to have some ballast in terms of asset prices, said Sam Hindle, president of the Levin Easterly Partners. Some investors are also wary of putting too much faith in polls after many failed to predict the UK's decision to exit the European Union in 2016 and Trump's election victory that same year. Traders in the options market are betting on a surge in volatility around the election. The S&P options market is implying an election-related move of 5 to 5.5% compared to the average absolute one-day move of 2.92% in the last 3 elections, according to Christopher Murray, co-head of derivatives at Susquehanna Financial Group. And then again, that was reported by Saqib Iqbal Ahmad and David Randall of Reuters. So, guys, what do you think? That's actually followed. The whole thing is actually followed by a Trump-Pence advertisement. That's pretty crazy. So, what do you guys think? Now, one thing that wasn't talked about in that article is obviously precious metals, and that's what we're primarily here for. If people are going to start moving money out of the stock market and start moving it out of the U.S. dollar, where are they going to put it? Ooh, they're going to come to us. They're going to come to the precious metals, baby. And that's just going to make demand go up. That's going to make the price go up. That's going to make our stacks feel a little heavier in the pocket, which is great. That's what we want. What we don't want, though, is we don't want a president that's going to collapse our economy because of his financial policies. I'm okay with a president having a collapsed economy because of a pandemic. I know that's weird to say, but if you don't want your economic collapse to be because of policy making by a president, obviously. So what do you guys think? I think this is going to be an interesting topic. I'd be very interested to hear what you guys have to say on this one. Go ahead and leave some comments down below. I am very looking forward to hearing what you guys have to say on the topic. Guys, I do greatly appreciate every single one of you. If you happen to appreciate old IndyXP, go ahead and leave me the thumbs up right there. Helps me out immensely in all YouTube's algorithms. If you happen to be new to the independent experience and you want to stay up to date on all the latest and greatest content as it comes out, go ahead and think about hitting that subscribe and jingle bell right there in the corner, bing bong, so you can be notified of when new content is coming out. If you want to catch up on all the past content, we're going to post the card right. I can never put my hands right. I always turn it the wrong way, and then you look at the backside of my hand. Right here. Right there. That's where that's going to go. Right. Okay. Almost got it right. There we go. All right. It's going to be right there. Make sure you guys click that at the end of the video. You can check out yesterday's video as well as all the pack catalog. Guys, I've been IndieXP from the Independent Experience, and I'm here again to remind you, if the women don't find you handsome, they should at least find your pockets heavy.